Hello and welcome to Market Matters, presented by MyX. I'm Joe Teagay. With me, as usual, is Brian Sutton. Say hi, Brian.
Hey, Joe. Thanks for having me on. This should be a great show today.
Yeah, looking forward to it. Do you have a good weekend?
I did. This last week in the markets was kind of like a cleanup time, try and figure out what I'm going to do for the end of the year. Chicago Bears were on a bye week. Michigan had an easy Big Ten championship win, so pretty happy about that. Obviously, headed off to the Rose Bowl to play for semifinals and eventually national championship. So that should be some fun stuff. But Joe, how about yourself?
Great weekend, a lot of great football. Amazed what happened with the playoff. I'd be upset if I were a Florida State fan, but that is what it is, and it's going to be really exciting playoffs. So I can't wait for that.
Yeah, well, let's just jump into it, right? The markets, we have a really interesting week with unemployment report coming up, a whole bunch of stuff. Joe, you're seeing some changes maybe in a little bit of a market sentiment. So why don't you sort of give us a rundown on what we expect this week and what volatility and spikes is doing?
Yeah, let's get into it. Weekly preview here. This is really critical for me looking at options, looking at what's going to happen this week. We got some interesting earnings this week. Just looking down the list here, NIO, that's an interesting car company out of China. I like watching that one. Chewy's an interesting one as far as retail go. Online on-time retailers are going. Maybe a little discretionary spending. How much are people spending on their pets? GameStop, always exciting and fun. Always a big move on their earnings for the past few years anyways. But we're going to look at C3. That's an AI company. That's going to be what we're going to be trading later today. I think it's going to be a little bit of heat check for the current market environment. AI has been the name of the game this year. So we're going to be trading that later in the show. As far as economic data this week, not a ton going on except this employment report. That is the biggie. That is going to move the market. That's kind of like an earnings release for the whole economy, really, is how is the economy doing? Are people going to reacting to the revisions? I've been talking about how the Fed's now paused. We're pricing in some cuts next year. When the cuts do come, that probably won't be good for the economy. As long as we're paused, the market does. When the cuts do come, that won't be good for the stock market. As long as we're paused, the stock market usually does well. So for me, this is going to be a good news situation. A bad news is bad news situation. Good economic numbers. I think the market will do just fine. Let's look at this, sentiment index here. Last week, I mentioned we had a tick up in the bullish sentiment and a tick down in the bearish sentiment. We got another instance of that this week. We got a bigger bullish tick this week and an even lower bearish sentiment this week. And maybe it's not surprising we're seeing a negative market this morning, but that's when I start to look at this as with my contrarian eyes on. And so to say, hey, something doesn't quite look right here. Remember, at the start of November, we had basically a 52-week high for bearish sentiment. Then we saw a 10% rally in the market. So that's really what I'm looking at here. And we're getting close to those levels. Looking here at the spike index, still very low levels for volatility in the low teens. I'm going to need something, above 15. If you look at this area here, I think right in here is a critical spot for me to get over there. If we get over that little hump, I think maybe the bears or the bears for the market might have something to hang their hat on. But right now, it just seems like the bulls are in control, and every dip will be met with some buying activity. And let's just take a look at this chart here. Now, this is kind of for volatility traders, this is something important to understand. So, people always think of volatility being a contrarian index and a contrarian way of looking at investing. And, I like to focus on that and lean on that contrarian narrative a lot. But just remember, low volatility does not always mean, the market's about to have a huge dip to the downside. In fact, when you see levels like we are right now, actually the market does pretty well over the next 6 months. If you look, the base case is here for a nice return over the next 6 months. So the market's really keying in on that. And sure, is it possible the market might have a nosedive in the next 6 months and have one of these spots down here down 10%? Sure, that's possible. That's not really the base case. What I like to look at in the VIX and volatility in the contrarian narrative is like, let's say, for example, today, like today, the market's lower, volatility is higher. Tomorrow we recover, but volatility does not go down. That's going to tell me something. It's kind of a clue. Or let's say we do have a 3% pullback over the course of the next 2 weeks, and volatility goes to the mid-teens, like goes to 16, 17 in the spike index. And then let's say the market does recover, but we do not come back down from that 16 area in the spike index. That's, for me, is when we're going to be in this window here where we got. Well, in this window here, sorry, where that's where I'm looking for the downside, and it's going to happen when you would expect the spike index to be lower, but it's not really as low as it should be. That's kind of the clue that I'm looking for. Brian, what's your take on that?
Yeah, I mean, I would say the one thing that I'm looking at here is when you look at the spikes, it is somewhat elevated relative to the beginning of September, and the market is kind of in the same spot. So at the very least, there are some minor hedgers or institutional traders going out and buying puts on the S&P 500, which is that measures implied volatility and translates to the spikes index. But when you have a buyer of, let's say, the SPY ETF, and you have buyers of puts, that's raising implied volatilities to some degree, and we're starting to see that little bit of tick up. To Joe's point, I get more concerned when the spike starts to hover in that mid-teens level, and the market continues to be a little bit higher or in the same spot, because now you're getting even more aggressive institutional hedgers in there expecting some sort of sell-off to occur. So we might get a little minor blip sell-off here. Maybe the S&P 500 trades back to this 4,500 level as sort of a pin into next week's Friday expiration. Let's keep in mind that's the quad witching expiration here. So as we get sort of to these quarterly marking points, you tend to get these big magnets, and so 4,500 might be one, and that might be where we get a little bit of a blip up in the VIX or the spikes, I should say, and so we'll see how that sort of translates further into the next year in 2024.
Yeah, bottom line is you start to see volatility get a little stubborn, get stick here in this mid-teens area when the market's going higher. That's when you're going to want to look out, and history suggests we might be in for a little bit of volatility trouble. So let's move forward here, talk about some big news of the day over the weekend. Really, we should have mentioned this over the weekend. Bitcoin out of nowhere just coming up with the rocket. Brian, what are you seeing here in NVIDIA?
Yeah. I think this is an interesting little chart to bring up here because obviously, Bitcoin has been storming. And so if I'm an investor, it's now like, oh, shoot, did I miss it? Should I still get in? What should I do when I'm seeing Bitcoin on the rise like it has been, crossing that big 40,000 mark? Well, when you look at this, NVIDIA, which is kind of interesting, obviously a lot of chips go into the mining to verifying in whatever parts of the crypto world. And so there's a pretty high correlation between what NVIDIA stock has done and what Bitcoin does. And what's interesting even more so is NVIDIA, it seems to take a week or 2 weeks. It lags by about 7 to 14 days. So this chart was NVIDIA lagging by 2 weeks, and compare that and overlay that to a Bitcoin chart. And you can see a very high correlation, other than sort of like this AI, artificial intelligence bump that we saw a few months ago for NVIDIA. It's pretty highly correlated to Bitcoin. So NVIDIA is a place probably, if I'm seeing Bitcoin jump like this, I'm looking to buy NVIDIA on some of these dips here, especially with the NASDAQ down on a day like today, as hard as it is. And then I go ahead and turn the page and I say, is this really going to be a good trade? And when I look at Bitcoin versus gold, because these are both basically places that are places to store your money in a sort of different currency. And this is the what's becoming sort of the worldly global currency, which is gold and Bitcoin. If you want to get out of your country currency, we've seen gold obviously having a tremendous run too. But today and the last few days, you're seeing an interesting reversal in gold where it's been down pretty hard today after being up. And it looks like when you look at GLD ETF, it wants to cover maybe some gaps a little bit lower. To me, that maybe indicates that Bitcoin has had its jump as well, possibly a reversal there, or at least a sideways trend till some of these other sort of crypto plays come up and catch up to it, such as NVIDIA here. So I think gold is maybe an interesting indicator for what Bitcoin will do, and NVIDIA lagging Bitcoin. Maybe NVIDIA is the better buy here on this play.
Yeah, that certainly looks interesting to me. But NVIDIA just in the last month or so, just having a bit of a pullback, but a fantastic, tremendous run. To look at it, people know of Bitcoin, of this like hyperbolic growth a rocket memes stock type of thing, but Nvidia is actually ahead of it since 2019. So it's really an impressive run here. And also, you just look at these charts. Let's look recently. Nvidia is coming down recently. Bitcoin is certainly on the way up. Say what you want about Bitcoin and crypto. It's a lot of benefits, a lot of interesting stuff going on in that world. But at least for me in Nvidia, when the price is lower, like it is the past few months, at least it's a better price to earnings. It's a better value to owning a stock. With Bitcoin, even if it were lower, I don't know what the value proposition just doesn't exist. It's just what is somebody willing to pay for it. For me, it makes a lot of sense to play the crypto world with Nvidia. There's a lot of other things going on, and we talked about the AI, but there's a lot of sound business reasons to be in Nvidia. People aren't going back to smoke signals. They're going to need chips. We're going to keep on going forward in technology, and Nvidia is well positioned there. For me, that's why it's one of the Mag 7. Absolutely.
Yeah.
So,
well, obviously we have Nvidia. That's a big growth name. That's something that we like, obviously, right now. But we have to review a trade, Joe. If we look back, let's take a look at what happened with Snowflake. Obviously, we outlined that trade last week or a couple weeks ago. We talked about a trade there. What did you make of this? I think, Joe, you kind of hit a home run on this trade here heading into earnings. What are you doing with this call spread that you had put on? Are you keeping it, closing it, putting on a new trade? What are you looking at?
Yeah. You can call me DJ Khaled because all I do is win. This was a setup we had going into the event. I was saying we're in the middle of this channel. Makes sense for it to trade up to the upside of the top of this channel. It did exactly that. We put up this trade. We're risking 385, close to a 2-to-1 payout on that trade. So right now I'm just essentially short a put spread. It's fully in the money. I'm very comfortable holding this position because I kind of like this play, even if it were to below 182.5. It seems like at this point would be a good spot to buy it, given the fact that it's at 186. So I'm actually just going to hold it for a little bit longer. Let some of that premium just kind of dissipate out. I do kind of feel like the market's stable here. We talked about where the volatility levels were. We talked about maybe some pullbacks being an area where the bulls are going to come in and buy the dips. So I'm kind of comfortable here, just letting this premium just kind of dissipate, fade away. I got my eye on it, ready to close it if the market does have a little bit of pullback. But I'm very pleased with this trade, and I'd be happy to kind of roll it out, look out into January, look out into March. Sell another put, just kind of keep on this overlay type of a trade where I'm going to use some optionality, collect a bit of extra premium, increase my probability of success to stay long snow.
Yeah, I like that. I like selling the put too if it sort of pull back a little bit. Obviously, keep a close eye on the call spread. Joe's obviously waiting for the max gain to occur, and that's probably the right play. But keep a close eye because you don't have to be too much of a pig. You don't need the full max gain. I never like to hold it necessarily all the way to expiration. If I have a nice winner and the premium or the amount of more gain that I can be had out of this call spread is so minimal, I might look to take it off. And then if I really like the stock, if it's pulled back a little bit, I go ahead and sell a put. All right, next up, Joe, we got earnings. We got to talk more about earnings here. You hit nicely on Snow. We have C3, which is the AI play. So this is basically an all tech show. We've been talking NVIDIA. We recapped Snow. C3, AI is the ticker symbol here. Earnings Wednesday after the close. How are you playing this one?
Yeah, this is another tech play, another AI play. AI has been the name of the market for 2023. Talk about the Mag 7. They're kind of leading the market forward, but really they're the best position to take advantage of the AI trend. That's really why they've done so well. Some of the smaller names, they've had really high valuations. It's been kind of trouble. It's been super volatile. And this is a C3 has been no exception. We've seen a ton of volatility in this one. So it's really high valuation. Of course, you look at this implied move. Yeah, it's pricing in a 12.5 or 12.3% move for the one day here with earnings coming on Wednesday, and the average move on earnings is 12.5%. So it's spot on for me. This is another case where I'm going to look at a call spread. Just got slightly in the money. 32.5 call spread, cost $1. Can turn that into 250, so the max gain will be 150. So not too bad risk reward. I much better risk reward than just being outright long the stock, because that's essentially about a 3% premium to outlay here. And we talked about the market makers are pricing in a 12.5% move, so it could be a much bigger. Could see a $3.5 move down easily. So I'm just going to play that market maker move to the upside. Turn $1 into 2.5. Fingers crossed. And if I do hit on that one, I'm going to turn it around and just be happy to be sure to put the same way I am in snow. Brian, what do you think of that?
Yeah, I mean, the main point you made here is the 12% implied move and what we've seen in previous earnings. So, a $3 move, you're talking about a stock going from 30.50 potentially down to, let's say, 27.50. Here, you're only risking $1. So to me, I feel like I'm risking maybe a third of the losses only, and I'm getting a majority of the gains to the upside. Let's say it trades up to 33.50 or so. I get a majority, maybe 50% or more of those gains. So I love the risk-adjusted returns. When you look at C3 here, this is a company that has said basically they're spreading out their number of applications they're offering to the consumers. The question will be when earnings come out, have they spread themselves too thin where their margins are compressing because they're trying to get out to more and more applications? Or are they going to focus in on a certain area of artificial intelligence that they can offer out to their consumers that's going to bring them a hefty return and not be spread in all kinds of crazy areas all over the place? Will they start to focus in? That's what I would like to see, and see, revenue growth coming from that, from their subscription-based pricing model here, and honing in on a handful of products that they offer and making those successful. If they do, then I think you'll see that 10% upside potential there and hit through that call spread. So I do just like it from in terms of a risk reward, because there's a lot of question marks coming into this earnings, and we'll get a good idea of where things are going in 2024 on this earnings call Wednesday after the close.
Yeah, a lot of novice traders might think, oh, it's going to go upside. I'm going to just buy 35 call and hit a lotto ticket, and then I won't have to work ever again. I think maybe that'll work sometimes, but I think higher probability trade is really what I'm looking at here. And just going back to the chart, we can see this 32.5 area. It was an area of support. I think that might turn into an area of resistance. I don't think it's going to blow through there. Maybe it will. I'll be happy with this trade if it does, but I think that's a reasonable spot to sell the call. And just in the last month, it's for reasons for bullishness. We got a higher low, a higher low, a higher low, a higher low. So I just think the trend is working for us here. I really like this nice upside here, and just risk defined. I'm not laying a ton of money out here. Probability is in my favor if we do get a positive result.
And remember, these options expire this Friday, so it all goes away. So this is somewhat of a binary trade. That's maybe the only negative part of the trade. So be careful of that. You've either got to decide to close this out before Friday, or it'll just come off the board. Remember, it won't be in your portfolio. You'll either be long stock from the long call, you'll get called away, whatnot. So keep a close eye on this through the expiration, even after earnings on Wednesday.
Excellent point. Moving on, we have the question of the day. I don't know if we have any in the queue, but I do have a good question coming up in the options 101 for Brian. Brian, any questions for me?
Yeah, so I would say my one question for you is, we looked at SPY, the spider. We talked about volatility earlier in the show. Are you adjusting any positions today given the market sell-off? Are you in panic mode? Are you using this as a place to sort of buy? You expected this little pullback to happen, and what are you doing with your position here?
Yeah, that's something we did this morning. We were looking at the market this morning. We got a little pullback. We were kind of anticipating a bit of a pullback on Friday, and we've been talking about this trend being, these pullbacks are being met with some buy demand. Until that changes, until we see something change with interest rates, something change with the economy, the trend, and physically the trend, the technical analysis, something changes there. The trend is positive, and these pullbacks are being met with some buy demand. So that's what we've been taking advantage. We got a little pullback, take advantage of it, use this opportunity to adjust our positions to either add some delta, sell some volatility, and take advantage of our protection that we have on existing already. So excellent question. Let's move on. Question for the day, Brian.
All right, before we get into the question of the day, I gotta take my regular suit off. I gotta get my trader's jacket on.
Oh, okay.
Right, because we like to use this last segment of the day sort of as like a learning for people. Somebody who's like just getting into option trading, let's say, or just learning about the market. We like to kind of use this last part as sort of our trading 101. So I'm putting the trader jacket on. We're going to give you a little lesson here. So what do you got for me, Joe?
Okay, options 101. What is a buy right?
What is a buy right? Okay, so let's break it down. When you're long stock or long an underlying price, you can see here for every dollar move up in the stock price and every one share that you own, you make $1. And vice versa the other way when the stock goes down. So it's a linear risk return profile. Every move up is 1, every move down is a loss of 1. When you look at selling a call, which is part of the buy right, what happens is, let's just break down the call itself. When I sell a call, what I'm basically doing is I am collecting premium. This is an option contract where I get premium. When I sell it, I'm short the call. That's what it's called. I collect premium. And as you can see, sort of as this graph starts to lean downwards and you start to lose money on this trade, that lean and that pivot point is the strike price of the option. So anytime the stock trades above that strike price, what you would have to do is you would be obligated to deliver stock or sell stock at that strike price. If you don't have the stock, for instance, then obviously for every dollar up and you have to rebuy it, you'd be buying at a higher price. You start to lose money until you reach your break-even point, which is the premium that you received relative to how many dollars or points the stock has gone through that strike price. And then anywhere below that strike price, you get to keep the premium from the short call. So now what happens if we take a short call and a long stock position? That's a buy right. What it looks like is it flips around like this, and we flip the game around. And this is kind of neat because basically you collected premium. So now your break even, instead of 1-to-1 right away, your break even is the premium you collected on the short call. That's really your break even now because you have a little bit of cushion to the downside. You still get to participate if the stock moves higher. It's just that you get called away because you have that short call. You're obligated to sell stock. So anywhere above that strike price, you're called away from your stock. You're out of your position, and your break, you have a basic constant profit and loss. You can't make any more, but you get to collect premium, and that gives you a little bit of a cushion on the downside. So that's our option 101 on a buy right for you.
Brian, just looking at this chart, just correct me if I'm wrong. A buy right writer, someone whose own stock sells a call, he can make money if the stock goes down.
Yes, that's right. That's the cushion. The call premium you've collected, that's your extra benefit cushion. So now your break even is lower. If the stock goes a little lower, you actually are a winner as long as it doesn't go below the premium that you pulled in relative to the drop in the stock price.
And what is the risk? Is there a risk? Is there a downside to buy right?
There is a risk. Obviously, you still own the stock. So if the stock goes to zero, you would lose all your money in the stock minus the premium you collected from the call. And that's why you don't lose 100% of your losses, but you lose a majority of that risk to the downside.
So you're still better off compared to owning the stock outright. And the only time you're better off owning the stock without selling the call is when you get a very large rally. Is that right?
Yeah. So I won't buy right heading into an earnings event, let's say, because I'm worried maybe there's an explosion to the upside. I can consistently kind of buy right an index, maybe if I think there's going to be some lower volatility. But if there's some big economic news coming out, a Federal Reserve decision, I may not buy right at that moment either. I don't want to take away events and explosions to the upside. So you got to kind of time this right. Outstanding.
I keep on learning from you, Brian. It's been It's been 13, no, 15, 16 years. I don't know how long it's been, but I keep on learning from you.
Yeah, sure. So, yeah, this has been a great show, everyone. We thank the MyX for your supporting and sponsoring the show. We thank Tradier for putting this on. We're going live every week, every Monday. Tune in. Make sure you write some questions in. We'll answer them directly on the show. And this is should be an interesting week coming up with the unemployment on Friday. So this is Brian Stutland from Equity Armor and Joe Tigay as well. So we'll bring it to you next week, same time, same channel.
Have a great week.